Ladies and gentlemen, good day and welcome to the Power Finance Corporation Q3 FY24 earnings conference call, hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Shweta Daptardar from Elara Securities Private Limited. Thank you, and over to you, ma'am.
Thank you, Manav. Good evening, everyone. On behalf of Elara Capital, we welcome you all to the earnings conference call of Power Finance Corporation to discuss the Q3 and 9 months FY24 earnings performance. From the esteemed management team today, we have with us Ms. Parminder Chopra, Chairman and Managing Director with additional charge of Director of Finance. Without much further ado, I now hand over the call to Ms. Chopra for her opening comments, post which we can open the floor for Q&A. Thank you, and over to you, ma'am.
Yes, thank you, Shita. A very good evening and a warm welcome to all of you. I would like to start this call by sharing an update on a very important milestone for PFC. In January 2024, PFC has received RBI approval to establish a wholly owned subsidiary in IFSC GIFT City, Gujarat. As you might be knowing that IFSC GIFT City is India's first financial services center. The government's vision is to make IFSC GIFT City as a global financial hub which will provide services not only to India but to the entire world. IFSC provides host of regulatory advantages like 100% tax exemption on income for 10 consecutive years, no GST on service, benefits on withholding tax, and many others. At PFC, we are proud to be part of this vision. I would like to share that PFC will be the first government NBFC to foray into IFSC. PFC's IFSC subsidiary will unlock avenues for us in international lending space and help in taking PFC's brand global. Now, I discuss PFC's financial and operational performance for Q3 and 9 months for FY24. On the consolidated front, we continue to see strong performance. The consolidated PAT for current financial year 9 months is at 18,900 crores, an increase of 26% from the corresponding previous year. The profit after tax for the quarter Q3 is at 6,294 crores, a 20% jump from the corresponding quarter previous year. The group's loan asset book registered a 19% year-on-year growth in the first 9 months of the FY24. As on 31st December 2023, the consolidated loan asset book stands at 9,54,483 crores. On the asset quality front, owing to our concentrated resolution efforts, the consolidated net NPA ratio is now below 1% and is at 0.86% as compared to 1.15% in December 2022. If we talk about the standalone performance, for 9 months 2024, PFC's profit saw a 26% increase from rupees 8,113 crore in 9 months 23 to rupees 10,232 crores in 9 months 24. The rise in profits is mainly due to increase in the interest income on the increased asset base, movement in INR being range bound, and stable provisioning due to no additions in the NPA assets. The profit after tax for the quarter is at 3,377 crores, which is a 12% increase from the corresponding previous year. Continuing with the endeavor to share our success with the shareholders, this quarter also our board has declared an interim dividend of rupees 3.5 per share. With this, the cumulative interim dividend for FY24 stands at rupees 8 per share on the enhanced capital base. Now coming on to our key financial indicators. If we look at the yield for 9 months 24, it's at 10.02%, which is 10 bips increase from first half year 24 yield. As we have been sharing in our earlier communications, the impact of interest rate increase has now started reflecting in our yield. The cost of funds for 9 months is within the expected range of 7.47. And if you remember, we have always been talking about the spread and our guided range, and accordingly our spread for 9 months 2024 is at 2.55% and NIM is at 3.42%. On the capital front, our capital adequacy ratio as on 31st of December 2023 is at 26.86% with Tier 1 capital of 24.28%. Now, I'll discuss our progress on the asset quality. This quarter, we have successfully reached resolution in Dance Energy loan of rupees 413 crore. This is in line with the guidance shared earlier. The resolution involved restructuring of the existing debt outside NCLT. After the resolution, the asset has moved out of stage 3, that is the NPA category. I am happy to share that there are no new slippages for the last more than 1 year in our non-performing assets. With this, our net NPA ratio is below the 1% mark at 0.90%. This is the lowest net NPA in the last 6 years. Further, our gross NPA has also declined significantly by 69 basis points from 4.21% in the 9 months 23 to 3.52% in the 9 months of FY24. Now, after the Dance Energy resolution, we have 21 stressed projects of rupees 16,000 crore approximately under stage 3. Of these projects, 8 projects worth rupees 2,174 crores are being resolved.
Ladies and gentlemen, thank you for patiently waiting. We have the management's line connected with us. Over to you, ma'am.
Yeah, thank you. I'm sorry, the line got disconnected. We were talking about the resolution of the assets. We were discussing the assets under NCLT. So, 13 projects worth rupees 13,899 crore are being resolved under NCLT, out of which 7 projects worth of 2,620 crores are under liquidation process, and 6 projects worth 11,200 approximately are at various stages of resolution in NCLT. Out of the 21 projects, Lenco Amarkantak project of 2,376 crore is in advanced stage of resolution. It's a 1920 megawatt thermal generation project, and the resolution is being pursued under NCLT. As you might be aware that the lender's back resolution plan was submitted to NCLT as a successful resolution plan. Subsequent to the submission of lender's back resolution plan in NCLT, multiple parties expressed interest in submitting a better resolution plan for the project. On this, NCLT has allowed the lenders to again conduct the Swiss challenge process. The Swiss challenge process has been done on 6th of February, and based on the evaluation and after approval of COC, the successful resolution plan shall be submitted to NCLT for approval. If we talk of the provisioning, we have maintained 74% provision coverage on stage 3 assets, which we believe is adequate. This quarter, we have also increased provisioning on stage 3 assets considering the current resolution status of the project. This has resulted in an overall increase in the provisions despite positive developments like the resolution of the Dance Energy project, which led to provision reversals. Now coming over to PFC's loan book. In the first 9 months of the current financial year, we have disbursed around rupees 79,000 crores. Our disbursements have risen by around 1.7 times on a year-on-year basis. The rise in disbursement is mainly driven by lending to distribution sector under government schemes and lending to the renewable energy sector. The uptick in the disbursements has led to 16% year-on-year growth in our loan asset book. Our loan asset book as on 31st of December 2023 stands at rupees 4,57,000 crores. For FY24, we expect to maintain loan asset growth at similar levels as that of FY2023. Regarding the future loan growth outlook for FY 2025, there are two areas which we feel will complement. One, the PFC's traditional lending business in conventional and renewable energy. This will be supported by the Pradhan Mantri Surya Uday Yojana, which presents a tremendous business opportunity. As you know, that the scheme was announced by our Honorable Prime Minister on 22nd January 2024. Under the Surya Uday Yojana, 1 crore households across the nation will get solar rooftop. The Surya Uday Yojana has been launched to accelerate the implementation of 40 gigawatt of solar rooftops vision. The scheme will help the country to become self-reliant in the energy sector. The scheme will be implemented through the state DISCOM and through SPVs set up by 8 central public sector undertakings under the Ministry of Power. Our subsidiary REC Limited has been appointed as the nodal agency to oversee the overall coordination and implementation of the Surya Uday Yojana. To achieve the target of 40 gigawatt, the total financial layout is approximately to the tune of rupees 2.4 lakh crore based on the tentative implementation cost of 60,000 rupees per kilowatt. Out of this, around 50% on an average funding is expected to come through government subsidies. This translates to a potential funding opportunity of 1.2 lakh crores in the coming years. Further, the scheme will also create additional lending opportunities for PFC across the entire solar value chain like equipment manufacturing, etc. To leverage these funding opportunities, our board has today approved funding to the tune of 1.70 lakh crore. We believe that the scheme will add to our growth prospects in the coming year. Another potential funding area we see is the continued lending opportunities in distribution sector under the government scheme. In 2022, the Government of India has launched LPS, that's the Late Payment Surcharge Scheme, to provide financial assistance to DISCOMs for clearing their legacy dues as on 3rd of June 2022. The scheme has been a great success, resulting in more than 60% reduction in the legacy dues. Till 31st of December 2023, PFC has cumulatively disbursed rupees 33,312 crores under LPS. Also, the carrot and stick approach adopted under LPS has improved the fiscal discipline among the DISCOMs by regulating the open access of DISCOMs on non-payment of its dues. To support these numbers, from FY 2023 till present, an amount of around rupees 8 lakh crore has billed to DISCOMs. Out of this, only less than 10% is currently overdue. To manage these dues, PFC is extending up to 1 year revolving bill payment facility to DISCOM. Till 31st of December 2023, PFC has cumulatively disbursed rupees 51,000 crore under the RBPF scheme. Next year also, we expect funding to continue under the above two government schemes. Additionally, we also see pocket of opportunities to emerge around the revamped distribution sector scheme, depending on the pace of CapEx work implementation under the scheme. Leveraging on these promising avenues, we see a positive loan asset outlook for the next financial year. Before I close, I want to address two regulatory events. One, as PFC has declared on the exchange about the LCR penalty yesterday. The recent penalty of 8.80 lakh is imposed by RBI. The penalty has been imposed for non-compliance with certain provisions of RBI liquidity risk management frame of NBFCs. On this, let me assure everyone that this penalty does not reflect PFC's overall liquidity position. Maintaining liquidity coverage ratio is a means to have readily realizable liquid assets for potential liquidity event. It's not a measure or reflective of company's day-to-day liquidity position. PFC is comfortably placed on liquidity front and is meeting all its obligations without any issue. Now coming on to why this penalty has been imposed. The penalty arose due to difference in interpretation regarding eligible high-quality liquid assets. PFC considered callable fixed deposits as HQLA, while RBI didn't consider this as eligible HQLA for LCR computation. This resulted in a gap in LCR for March 2022, leading to the penalty. Now we are aligning our approach with the RBI interpretation to ensure compliance. I want to emphasize that this does not impact our business operation or financial strength. PFC remains committed to the highest standard of regulatory compliance. Now coming on to the draft circular issued by RBI on January 15, 2024. This circular brings government NBFCs like PFC under the purview of RBI's credit concentration norms. Now there have been concerns among investors that this will impact our lending abilities, especially for our government book. Let me assure you that PFC has been proactively managing credit concentration for years. We have been complying these norms to our private sector loan book since 2010. And in 2022, we have adopted them for our government borrowers in line with RBI's specific directions. Currently, we have ample headroom for lending for our government book also. We have around 12.8 lakh crore of available exposure on our total government book. For our top 10 borrowers, constituting around 40% of our outstanding book, we have over rupees 90,000 crore of exposure available. Additionally, exclusion of state government guaranteed loans from exposure limit provides even more flexibility. Thus, PFC is well positioned to support the government lending business and contribute to the power sector growth. To conclude, Q3 has been a stable one, demonstrating our commitment to consistent performance. And we look forward to building upon this momentum. Thank you for joining the call. Now we are open to the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to only use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Shreya Shivani from CLSA. Please go ahead.
Hi, thank you for the opportunity. Ma'am, I have two questions and it's mostly regarding the loan growth and disbursals. So particularly coming to the disbursals for the LPS scheme. So till September 23, you had mentioned that for the standalone book, the sanctions for under LPS has been 705 billion, of which disbursals were 315, and right now you updated that the disbursals till December is at 333, I think 333 billion, right? So what was the reason that the disbursal in this quarter under this LPS scheme was slower, and effectively half of the disbursals are left, right, of the sanction, of the amount that you have sanctioned? So will that what is the reason? I mean, should I expect a slower disbursal under the discoms for the next quarter also, because that's the only way we can get to the loan growth that for FY24 that you are mentioning, that you will repeat FY23's loan growth in FY24, that is 13% loan growth, which means we will slow down in the fourth quarter. So want to understand the dynamics of this. And ma'am, on FY25, given that we still have growth drivers with many of the segments and probably infra segment also, which the disbursals have started happening now, can we get any guidance on FY25 that will it be much better than FY23 or 24, which you are indicating will be at 13% growth? So largely my questions are around these subjects.
Yeah. Shivani, you have asked two questions. Let me address the first question about the LPS scheme. As you might be aware that the LPS scheme, based on the outstanding amount of the dues, has a provision of opting for installments between 12 monthly installments to 48 monthly installments. So wherever the amount of the installment was less, there the 100% disbursement has already been made. So there are few cases where the option was to go ahead with the installments maybe for 36 or 48 installments. So accordingly, only in those cases the installments are being paid right now, and accordingly the LPS disbursement. So as and when it is maturing, so it is going to be discontinued further, and accordingly our disbursements may be lower step by step going forward. So that was on the LPS. On the infra sector, the total sanctions by PFC till date was 31,222 crores. So there are certain other major sanctions in pipeline, and apart from that, as you are aware that it always takes some time between the disbursements, sanction and the disbursements. So because the borrower has to comply with certain pre-commitment conditions, then the document which happen, and then certain pre-disbursement conditions are required, and only then the disbursement starts in infrastructure. So till now, the disbursements in the infra space has been to the tune of around 2,726, and we see gradually growing in the current financial year and in the next financial year.
Got it, ma'am. And any guidance for FY25 that, because as you were saying that LPS scheme disbursements will slow down, so FY24 we should only expect 13% growth. Anything on FY25?
See, as I told you, there are two more schemes. That one, the Suryodaya scheme, which has been announced for the rooftop solar, and you might be aware that PFC has been proactively sanctioning even loans for the equipment manufacturing. So we are there to promote the Honorable Prime Minister vision of rooftop solar as well as Make in India concept. So we have funded to the top manufacturers, all the top companies for the solar equipment plant. One is that. And otherwise also, we are looking for the opportunity of funding for installation of the rooftop solar also going forward. The other thing is the RDSS scheme. I agree there has been till now, there has been the slower pace for the progress under the RDSS. But now, in most of the cases, the award of the contract has already been made. 1,28,000 crore award has already been made under the loss reduction, and otherwise also the prepaid meters have also been ordered. So once the orders are placed, the actually execution of the contract starts. So eventually whatever are the disbursements under RDSS, that we will be going forward doing. So I think that gives us, apart from the normal generation, be it conventional generation, be it renewable generation, transmission or capex under distribution, these two schemes will give us the added advantage. And RBPF, we already said, that is there for the current dues, and that we will continue to fund for in the short term.
Got it, ma'am. Just last question. How much disbursal in the LPS scheme for the remaining installments is left versus the sanction? Because this quarter you've not given the sanction number for LPS scheme.
The PFC has cumulatively sanctioned around 61,000 crores and disbursement of approximately 33,000 crore has been made. So we are expecting that the balance will be over a period of from 22 to maximum installment is for 48 months. So over a period of next 2 to 3 years, the balance installment will be paid.
Got it, ma'am. Understood. Thank you. Useful. Thank you so much.
Thank you very much. A reminder to all participants, please press star and 1 to ask questions. We have our next question from the line of Shripal Doshi from Equirus Capital. Please go ahead.
Hello. Thank you, ma'am, for giving me the opportunity, and congrats on good set of numbers. Ma'am, the first question was pertaining to the NPA resolution. So, in case of Lanco Amarkantak, you said there has been a revision in the resolution plan. Because earlier, if we recall, like REC and PFC were supposed to form a third party and then run the Lanco merge contract franchise. So what is the change in the resolution plan now?
See, as I told you that there has been a better offers for the resolution under the resolution plan, and you know that PFC REC was as a lender-backed resolution plan has submitted the plan for the value maximization, because we were thinking that what the actual realizable value we are not able to receive. So we have bidded the project on the estimation that we will do some value accretion and will be able to fetch a better price. So based on the tentative quotes which were received, the lenders have approached NCLT to allow for the fresh bidding process. So that is how that as I informed you, that the process has been run on 6th of February and evaluation is being done. So once the evaluations are over, then we will be submitting the successful resolution plan to the NCLT for approval.
Okay. So we'll wait for new bidders now for this project.
Yes, we will wait for the successful resolution plan evaluation and then we will go.
Got it. Any other account which is in advanced stages of resolution apart from this Lanco contract?
See, we are also looking for resolving another asset in the current financial year. That is a hydro asset that is outside NCLT, and we hope to achieve the finalize the resolution plan soon.
Do you mind sharing the name, ma'am? Or what is the quantum of exposure that we have?
It's similar to the dance. It is the Shiga hydro project. So approximately 500 crore is the PFC's outstanding.
Okay, got it. And then the last question was pertaining to growth side. So as the earlier participant was also alluding, so we are guiding for 13-14% growth for FY24, or is there a disconnect there?
See, as of now, what I can say is the growth is going for the current financial year. It is going to be within this range only, which we are expecting it for the expected for the previous year, maybe somewhere around 12 to 15%.
Okay. And for FY25, if since there is RDSS also which will see better momentum. So in FY25, will the growth momentum be better?
Yeah, we are expecting it to be in the similar range for the next financial year also.
Okay. Got it, ma'am. Thank you so much.
Thank you. We have our next question from the line of Jigar K from B&K Securities. Please go ahead.
Yeah, hi ma'am. Thank you for taking my question. Just wanted to know what was the sanctions that we have done till 9 months FY24 for this year.
Till now, the sanctions made are to the tune of 1,44,000 crores.
Understood, ma'am. And would it be possible to share what would be our provision cover on Lanco that we are carrying on the books?
Just a minute, maybe it's around 50%.
50%. Okay. And ma'am, just on the growth front, again circling back to growth, we have seen REC, our subsidiary, grow at a much faster pace, and they also are capitalizing on the similar runway that we have on the RE side, infra, as well as the government projects. Any particular reason why there has been such a sharp difference in between growth for us and REC? And secondly, if I have to look at last quarter, you had said medium to long-term growth would be around 15 to 20%. So would now there be a little bit downgrade on the lower side? We are looking at the growth for AUM over the medium to long term, somewhere around 15% overall.
See, on the growth front, I just don't want to compare it with REC because every company has its own policy. But we want to have a sustainable growth over a longer period of time. That is what I can say. And if you see that we have been talking of, you rightly said that in the last call I said 15 to 20% growth. So till Q3 we have already have a growth of around 16%. And you may be surprised that why I am saying 12 to 15% growth. But you know that under Q4, otherwise also our disbursements in the previous year are on a higher side as compared to the earlier earlier 3 quarters. So this year, as a matter of strategy, we have taken care, and if you would have seen that even in the first quarter, we have very good growth numbers as compared to the previous years. So we want to have our disbursements also spread equally over the full year and on each of the quarters. So this is the change in the strategy we have done in the current financial year. And that is why I am saying that our growth is going to remain within these numbers. And I can assure you that it is going to be there on a sustainable basis for quite a longer term.
Understood, ma'am. And just lastly, we would maintain our NIM and spread guidance, right? 3.5% approximately NIMs and 2.5% spreads is what we would be looking at.
Yeah, that will be. We are hope to maintain, and our guidance is for those numbers.
Sure. Thank you so much. I'll come back in again for any follow-ups. Thank you.
Thank you. We have our next question from the line of Nishant Shah from MLP. Please go ahead. Hello.
Hi, ma'am. Hello, am I audible?
Yes, sir, you are now audible. Please go ahead.
Yeah, sorry about that. Congrats for the quarter, and just like in part my question has been answered. Like the questions again around like growth. So we are kind of like a little well capitalized right now. You mentioned about like mobilizing more than 1 trillion of fresh kind of like funding for next year. How should we read this? Is it like you're anticipating better growth next year, some more infrastructure projects getting operationalized and you're preserving your capacity for that? Or how should we kind of like think about like growth for next year? This year it's well taken, there's probably some base effects in 4Q and stuff, but for the next year, how should we think about growth?
See, as I told you that the growth next year also we are looking at the similar numbers. The growth is primarily going to come on one, renewable. Lot of work is being done on the renewable side, on the energy transition, and on the equipment manufacturing. There is a lot of scope for the equipment manufacturing in India. And on the other hand, we are expecting that RDSS disbursement under RDSS sanctions is going to pick up from the next financial year. So these are the two fronts. There is another factor. If you have heard the Honorable Minister of Power statements that to meet the power requirement of the country, there is a need to add some to focus on the conventional energy generation also. So by that we mean that we will be adding certain new thermal power projects, or wherever the thermal power projects were stalled there will be work will be restarted, which gives an opportunity to fund us that, because historically we have been the major lender in all such projects. Hydro, again, the government has a lot of focus on the hydro projects. Everybody is talking about the huge capacities coming out in the Arunachal Pradesh and Northeast. So we are working on that, and we will be having I think, good share in those activities also. Wherever there is a long-term requirement of the funds is there, and that too with a longer gestation period, and the quantum is higher, I think we are well equipped to fund all those projects. This is on the energy side. And now if we talk of the infrastructure, slowly, as I told you, that whatever sanctions we have already done, we are expecting it to materialize into disbursement in the next financial year. Further, there are number of proposals in the pipeline, be it funding of the metros, we are funding for the ports. Earlier also we have shared the data, we are funding for the waste to energy projects. Lot of energy transition, e-vehicle, that all fronts we are working on, and we hope to capture our share in all these areas.
Thank you, ma'am. A couple of follow-up questions there. Firstly, you mentioned on probably preserving some capacity for thermal and hydro and other conventional, like non-renewable, traditional kind of like power financing. Would you be able to kind of like quantify how much should that be? And the second part of that question is, renewable we understand is a lower margin or like lower kind of yield business. Should we then read this as, okay, if you do more thermal projects, will it come at higher loan spreads because there's added risk over there? And therefore, like, how should we think about margins in that context? And secondly, just more a qualitative question, like it's both PFC and REC are now diversifying away from being power sector financiers into more broader infra kind of financiers. So could you talk about, like, what kind of capacity addition you've done in terms of human capital, hiring people from outside for kind of like, assessing these non-power related projects? Power has been our forte, but what about the other projects? Like, could you talk about that a little bit? So those are the two kind of follow-up questions to that.
Okay, you talked about the capacities to be added. So as of 31st of December 2023, the total capacity, installed capacity is around 400 gigawatt, which is expected to be doubled in the next 5 to 6 years. We are expected to reach to around 800 gigawatt, and of which around, as per the Honorable Prime Minister's statement, around 50% is going to be the renewable capacity. If we see the National Electricity Plan, the total capital investment of approximately 33 lakh crores is required for, if we talk of the 500 gigawatt capacity addition, in addition, and the battery storage and the capital investment for non-fossil fuel basis. And 19% we are expecting for the investment in the fossil fuels. So, if we see these numbers and if you see our current market share, we have been funding to the tune of 20 to 25% of the total lending for the power sector on standalone basis. So, going by these numbers, you can very well work it out. It is primarily it doesn't talk of the energy transition, it is basically only funding for the capacity addition which we are talking. If we are talking of the energy, that equipment manufacturing, energy transition, then the requirement of funds would be much more in the power sector. Apart from this, the distribution sector and accordingly the transmission sector is further requiring the capital infusion. With regard to the infrastructure sector, as I think I have shared earlier also, initially we are looking at the projects being funded by the banks and taking a share of that. We know that till now we have capabilities only in the road sector, in the power sector, but slowly we are building our capabilities in the other infrastructure sector, maybe the road, refineries, metros, and ports, etc. So we are building capacity of our existing employees, as well as we are looking of the sector-specific experts also to strengthen our appraisal.
Understood. And could you talk about like margins on the conventional projects? Am I to interpret that if we do more traditional financing, does that improve our margins going ahead?
See, you know that you rightly said, in the renewable space, there is always a pressure on the margins because we are facing tough competition, and still we are one of the largest financer for the renewable sector. And when we talk of it is being compensated by the existing generation, transmission and the distribution sector portfolio. And going forward also, I agree that conventional generation gives a bit higher margin, but now the companies have lot of avenues for funding. So the competitive pressure is always on us. So that is why we have always been giving that guidance that we will be able to maintain our spreads at around 2.5%.
All right. Yes. That's it from me. Thank you so much.
Thank you. We have our next question from the line of Sonal from Bowhead Investment Advisors. Please go ahead.
Thank you so much for this opportunity. Ma'am, my question was pertaining to growth, and let me give you a background why everybody is trying to clarify that. Since our long-term guidance is 15-20%, and we are expecting 13% growth this year and almost similar growth of 13% next year, what people are trying to understand is that, are we being conservative and this is a generic number we are giving, being a conservative management, or is it that the growth is going to be significantly back-ended, and therefore, while growth is only 13% this year and next year, the cumulative growth rate is 15-20% from a long-term perspective, and therefore, for future years after 25, the growth rate will be, significantly higher. Thank you.
See, just to throw a number, we can throw any number. That's a different thing. But we are wanting to be a bit realistic. I have not given any number of 13% for the current financial year. I told that it is going to be around 15% for the current financial year, as well as we are looking for the similar number for the next financial year also. But you should appreciate the fact that on the growing base. So if 15% has already increased this year, and on the growing base we are assuring you 15% growth, so that there will be repayments also. So on an average we have asset book of average life of the asset as 6 years. So on an average you can work out that if we have funded 4,60,000 crore is our outstanding book, what would be the average repayments, and on the on the expanded base how much we have to disburse, you can very well work out the numbers. So I think we would like to give realistic targets of around 15%.
Thank you, ma'am, for clarifying. Just, a counter question to that. uh, since you mentioned that long term is 15-20% and your base will continue to increase in the long term, so you have talked about between 15 and 20. Are we expecting that, despite higher base of 15-20% growth in over the long term, because the capacity, addition of thermal which happens, the growth on account of that will come to us with a lag because, that's a long process of, the projects being started and then, you're disbursing as the capex happens?
I think your concern is right that whatever capacities we are expecting right now to be at, but this is not a too long target. We are looking for next 3 to 5 years only. Whatever sanctions we, as of now we have, it is going to mature in the next 2 to 3 years, and whatever additional sanctions we are doing. See, these, I agree that for the new hydro project, it's going to take time, but there are certain thermal capacities for which only expansion has to be done. So it's not going to take time like in case of the greenfield projects. So there is a scope of expansion in the existing projects. There we are looking at adding the new capacities. So it is not going to take for the long term, and it will be, I think, can soon be coming. Ministry of Power is expecting that this required capacity will be added in the next 2 to 3 years. So based on that, we think that there is enough opportunity with the energy transition, looking at the new avenues. Everybody knew, you have seen in the budget, the VGF is given for the offshore wind, so there is a new area coming up. There is a progress on the hydrogen front. So all these taken together, we think that it is a sustainable level of growth.
Thank you so much, ma'am, for clarifying. Thank you.
Thank you. We have our next question from the line of Ketav from Anand Rathi. Please go ahead.
Congratulations, ma'am. I had two questions. Number one was if you can highlight what is the competitive intensity right now, given that the sector macro has improved. So are banks now looking more at this area? What are you, seeing on the ground?
See, you know that under the renewable, we are already facing competitive pressures from the banks and other FIs. But if we see that for the thermal or the hydro, you know that the cost of project is huge. So it will not be possible for any of the lender to fund it on standalone basis. So there has to be consortium, and the type of exposures we can take, none of the other financiers are able to take. So we as a group, I think, have a upper hand in funding of be it thermal project or be it hydro project. So there may be smaller portions which can be taken up by the banks, but they have sectoral limits, they have exposure limits, individual company exposure limits. So we are, I think, well positioned to take higher exposure in all such projects.
Got it. Ma'am, secondly, in terms of cost of fund during this quarter, given that several banks have been complaining about tight liquidity conditions, what are you seeing on the ground, and does that change any guidance in the near term at least? I know long-term outlook, we still maintain the NIM and spread, but short-term, does it in any way change the outlook?
See, you rightly said that there is a tight liquidity in the market and interest rates are hardening, even though there has not been any change in the RBI rates. But if you see that in the current financial year, based on our increased cost of funds, we have reviewed our lending interest rates and we have increased them in line with our increase in the cost of funds. That is why eventually you are seeing that we are able to maintain the spreads over the period, and we hope to maintain those because we are reviewing our interest rates on quarterly basis.
Got it. Okay. Thank you, ma'am. This is very helpful.
Thank you. We have our next question from the line of Steven from Stockfield. Please go ahead.
My question has been answered. Thanks.
Thank you. We have our next question from the line of Niharika from Equitas Investment. Please go ahead.
Hi, thank you for the opportunity. So my first question is just a follow-up of last participant. You said that our lending rates now we are increasing in line with the increase in cost of funds for us. But I believe that our reset period is a bit longer. So can you just elaborate on that fact that how much time will it take to actually pass on the rates? And will we see some contraction in the margins?
See, our reset period, in some cases it's 1 year, it's 3 years or 5 years. So we have different reset dates depending on the option which has been chosen by the borrower. So even if it is at 1 year, so whatever is the card rate as on date, that will be applicable on the reset. So automatically, if our cost of borrowing is increasing, so all reset will be happening on the revised rates. So apart from the new disbursements which are taking up, which are being done at the revised rates. So I hope that will not impact our margins or spreads adversely.
Okay, that was helpful. And my second question is on dance energy. So how did we have any write back on the provisions, or basically how much was the provision and how much was the recovery on that?
See, there has been a provision reversal of around 79 crores during the current quarter. So in this case, I think 90% recovery rate was there.
Okay.
Even interest we are going to get.
90%.
Full principal.
Hello.
Yeah.
My other question is on Lanco. So I just want to understand management's view on it. So if we are getting better bids for it, are we still bidding from our side and still we are okay to take it again on our books? Are we basically submitting another bid, not as a lender but as a takeover of Lanco Amarkantak in our books?
I think till the time evaluation is done, I would not like to share this information. And on, I think earlier, I would like to correct myself. Earlier we said that we are maintaining a provision of 50% in case of Lanco, but actually it is 76% we are maintaining the provisioning in case of Lanco Amarkantak. And we are expecting reversals in case this new plan is accepted by the NCLT.
Okay, and I'm not sure if this was answered or not. What is our sanction book as on date, as on 31st of December?
The current year sanctions are approximately 1,44,000 crores, and I think from the previous year we are continuing maybe around, I don't have the figure right now, but it may be somewhere between around 1.5 lakh crores.
Okay, and in this, so basically again on the interest side, how are we planning to basically manage the cost of funds? Basically, are we planning to take more foreign loans, or because the interest costs are hardening, particularly in India? So
See, if interest rates are hardening in India, and I think there is a similar situation if we borrow it from the international market also. So, if we see as on date, we have 18% borrowing in the foreign currency, 19% is the RTL from the bank's FIs, and the domestic bond constitutes 58%. So major are these sources, but we always try to optimize the mix to ensure that our overall cost of borrowing remains within the range. So it all depends on the market, whether the bond market is gives us that opportunity. And we, as earlier said, we have always told that we wanted to maintain around 20% of our borrowing in the foreign currency market. Last year we have raised funds in the JPY. This year we have raised funds through the syndicated loan in dollars also. So it is around 12.42% borrowing in these 9 months, which has been done in the foreign currency. There are bonds constitute approximately 44%. You know that we have also launched public issue, which gave us the 2,824 crores. RTL also this year we have raised a lot of them and constitute around 25% of the total borrowing.
Okay, that was helpful. That was it from my side. Thank you.
Thank you. We have our next question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good evening, ma'am. Most of my questions have been answered. Just for the Q4, what is the expected disbursement and the kind of disbursement growth rate that you are assuming for the next year?
See, we have said that we will be able to maintain loan growth of 15%. So we hope to, so we will be able to maintain that. This is what I can say.
Understood, ma'am. And secondly, on the infrastructure side, you had said that the disbursements is only 2,000 crore as of now. So what are the plans for the next year in this particular segment?
See, as I told you that this year we have till now sanctioned around 33,000 crore in the infrastructure sector. So we are expecting the disbursements to pick up. Maybe few disbursements we will be able to make in this current quarter, but most of them is going to go in the next financial year. So it's going to take time for this converting into disbursements.
Understood. And finally, you said that sanctions that you have done this year is 1.44 lakh crore, and last year cumulative sanction which was not dispersed was 1.5 lakh crore. So are we in total, is there around 3 lakh crore which is sanctioned but not yet dispersed, or what will be the value as of now?
See, I don't have the numbers. I told you I have just given my guesswork. I don't have the numbers right now for the sanctions which are yet to be disbursed for the previous years.
No, as of now, do you have cumulative sanctions which are not yet dispersed?
No. That number I told you that I don't have that number, but current financial year 1.44 lakh crore has been sanctioned. But for the previous year, it's just my estimate that it's around 1.5 lakh crore.
Understood, ma'am. Okay, thank you.
The number may not be correct also because I don't have.
Sure, ma'am. Thank you.
Thank you. We have our next question from the line of Himanshu from Elara Capital. Please go ahead.
Yeah, thank you so much for the opportunity. I have just one question. So I just want to know about the renewable portfolio protection, how we are going to see in the future. Like, are we being tight conservative on the renewable portfolio protection?
I couldn't get you. Can you please repeat?
Yeah. So basically, I just want to know about like how going go forward about the renewable portfolio, about the traction we are seeing in the a good opportunity we are seeing in the future about the in the 525 or 26.
Yeah. We are looking for, I think if you see on overall basis, as on date, our renewable portfolio is approximately 12%. So we are looking for, I think, in the next 2 to 3 years, it may be around 20% of the total portfolio.
Okay. Okay. Great. Thank you so much.
Thank you. We have our next question from the line of Nilesh from Bank of India Mutual Funds. Please go ahead.
Hi, good evening, and thanks for the opportunity. My first question was on the MOU which we signed in July of last year for around 2.4 lakh crore in Goa. What's the status of there? Where are we in that stage?
So that was a combination of equipment manufacturing. Few of the borrowers were intending to borrow for the hydrogen. There were certain simple plain wind and renewable projects. So if you see our sanctions to the wind and disbursements is increasing day by day, and so at that point of time, MOU has been signed. Equipment manufacturing, if we talk, we have sanctioned the projects even for the Adani, Renew, Suzlon, all the big players in the market. We have sanctioned the equipment manufacturing facility, which is going to be a big push for the Make in India. So slowly, all those MOUs, under all those MOUs, we are sanctioning as and when the borrower is ready with their DPR and the appraisal is being done.
So any number which you can quantify out of 2.4, what has been sanctioned till date?
Right now, I don't have those numbers which have been. We will share with you separately.
Okay. My second question was on the infra side. So today, of course, we have sanction amount of 33,000. But on the software aspects, wanted to understand, until some time back, we were improving or increasing our capacities, hiring sector experts for the sanctioning, etc., deep understanding of the projects and sector. So where are we today in that? Do you think have we filled the gaps? Going ahead, say FY24 onwards, can we expect a decent growth rate as far as infra lending or sanctioning is concerned? So what's happening at ground level, at PFC's level?
See, at PFC, we have been sending our employees for the advanced training programs to build the capabilities for appraisal for the infrastructure sector. If we talk of few of the sectors like biomass, we can talk of the refineries, we can talk of the ethanol projects. Our employees have appraised number of projects and have built the capabilities to appraise it. On roads, we have sanctioned number of projects. So we are adding to the capabilities of the employees, and wherever required, we do take the help of the and external experts as of now, and we are planning to have those experts on our rolls also going forward.
Got it. And one last question from my side. I just wanted to understand on the competitive intensity. Of course, you touched base on it in previous participants' question, but say 5 years before, when a lot of PSU banks balance sheets were not of the capacity to sign or cut a higher value check versus today. So can you help me understand 5 years back, out of 100 rupees loan disbursed to power sector, what was PFC, RECs or maybe IRDAS or power financials market share? What is today after 5 years? And what is your assessment of this going forward?
See, earlier also, I think the assessment was made when we acquired REC, Government of India holding in REC. At that point of time, it was assessed that around 20 to 25% market share PFC has, and a similar share is there for REC also. That is why, if you remember, we have taken the approval of the Competition Commission of India at the time of acquisition. And if you talk today also, so today we have not assessed, but it's that we may be maintaining the same market share as of now also.
So if the market shares are expected to be same, so wanted to understand with this 50 gigawatt of renewable expected per annum for next 7-8 years, why are we anticipating a lower growth rate going forward? Because if I see solar capacities has been the range of 14-15 gigawatt additions per annum in the past. But now we are talking about at least 50 gigawatt in renewable space. So what is stopping us from giving that higher guidance, or are you assessing something else which we are unable to understand?
I'm not assessing something else, but the only thing is that whenever there is something on the ground and it is my hand, only then I'll be able to share any guidance. So giving any number and not able to fulfill the expectations of the investors, I really don't want to commit any such number.
Okay, but in general, you expect market shares to remain similar.
Yeah, that is there, and I have shared with the expected capex in the sector also the numbers that I have shared. So this is what I can say at this point of time.
No problem, ma'am. That was helpful, and thank you so much.
Thank you.
Thank you. Due to time constraint, that was the last question for today, and I now hand the conference over to Ms. Shweta Daptardar for closing comments. Over to you, ma'am.
Thank you, Manav. On behalf of Elara Securities Limited, we thank the management of Power Finance Corporation to provide us the opportunity to host this earnings call. Thank you, team. Thank you all.
Yeah, thank you very much. Thank you.
Thank you. On behalf of Elara Securities Private Limited, that concludes the conference. Thank you for joining us, and you may now disconnect your lines.